One of my videos I mentioned equity real estate investment trust as well as mortgage real estate investment trust. So in this video, I want to highlight the difference, you need to take into consideration the difference between equity real estate investment trust and mortgage real estate investment trust. These are all real estate investment instruments you need to fully understand. Number one is equity real estate investment trust. So when it comes to the focus of this particular trust, equity real estate investment trusts invest directly in physical properties such as residential buildings, commercial offices, shopping malls, hotels, as well as industrial facilities. They are owned and managed. They own and manage real estate, assets, collecting rental income from tenants. They own it, they manage it, and as well as they collect rental income from their tenants. That's the focus. When it comes to the revenue source, here, their primary revenue comes from, rent payment made by tenants. That's the primary source of their income. They get their money from rents paid by their tenants. The value of these properties can also appreciate over time, leading to, potential capital gain, because generally, real estate can appreciate in a very good economic environment. Not only that, we also want to look at the income distribution. We've considered focus, revenue source. This time around, I want to consider income distribution. So in the area of income distribution, actually, equity real estate investment trusts are required to distribute at least 90% of their taxable income to their investors. That's by law. All right. So their shareholders get to receive 90% of the taxable income. So, which of course, consists primarily of income generated from rental income. So let's look at the risk profile. What is the risk profile that is linked with a typical equity real estate investment trust? The risk profile or the risks for equity real estate investment trust links to property market condition, including vacancies, rent fluctuations, property managers' costs, as well as market trend. Number one, what is the prevailing market condition? What is the occupancy rate? In that case, that's vacancy. What is the occupancy rate? And how does rent fluctuate in that location? So all these factors are the risk factors that the investors could be exposed to. So we look at examples. Real estate investment trust specializing in office building. Example are example is Boston Properties. Residential real estate, example equity residentials, or industrial real estate. A typical example is Prologis. These are companies that are representing or could be considered or classified as a real estate, as equity real estate investment trust. So we are through with the real estate aspect, the equity aspect. We want to look at the mortgage real estate investment trust. The mortgage real estate investment trust. We still want to emphasize the focus here. The focus here is the mortgage real estate investment trust, invest in real estate debts rather than physical properties. In the case of the equity, they invest in physical property. In the case of the mortgage, they invest in what? In the real estate debts, all right, rather than what's obtainable in the equity real estate investment trust. They provide financing for real estate, for real estate by purchasing or originating mortgages. These mortgage-backed securities as well as loan backed by real estate. So they provide loan, they provide mortgage, and the collateral actually is the real estate itself. So they are backed by real estate. So what they have is that what they get in is the interest they receive from this loan that they give out to probably developers, in the real estate space. Then you look at the revenue sources or the revenue source. The income from mortgage real estate investment trust comes from the interest payments on the mortgage or loans they hold. They may also benefit from the appreciation of mortgage-backed securities. The matter is that, in the case of the equity real estate investment trust, their source is rent payment. Now, for the mortgage aspect, for the mortgage real estate investment trust, their source here is what is the interest payment as against rental income or rental payment in the equity aspect. So when it comes to income distribution, it's similar to the equity real estate investment trust, and are also required. They are also required to distribute at least 90% of their taxable income to their shareholders, often from, in form of high dividends due to the nature of their interest-based income. So whatever they get as their interest, because they have interest-based income, they will share the income 90%, over 90% of it to their shareholders. So you have on the risk profile here, let's consider the risk profile. The primary risks of mortgage real estate investment trust are related to interest rate changes. In the other case, it has to do with what? The fluctuation in rents, and vacancy rates, and and the market condition. But in the case of this particular one, the mortgage real estate investment trust, discovered that it is related, principally to the interest rate changes, and of course, you equally factor in credit risk. That's a default on loan. The people that collected the loan may default, and the fluctuation of the value of the mortgage-backed securities. So mortgage rates can also be highly sensitive to market liquidity as well as credit condition. Example of this include annual capital management, AGNC, investment core. So these are all companies that are really operating or they specialize, in mortgage investment. These are typical example of the companies in that space. So in summary, actually, we want to look at the key differences in summary when it comes to the primary investments. Their primary investments, the equity real estate investment trust invests in physical properties, while the mortgage real estate investment trust, they invest in the debt or the mortgage-backed securities. When it comes to revenue source, the equity here, aspect, they get their primary source is rent from tenants, while for the mortgage is interest from loan. When it comes to income type, you have rental income and potential property appreciation for equity real estate investment trust, while you have interest, income, sometimes capital gain from mortgage-backed securities for the mortgage real estate investment trust. Then you consider the risk factor for the equity, trust here. You have property market fluctuation as well as vacancies, and then lower rent. Whereas the risk factor for the other for the mortgage, aspect is interest rate change, credit risk, as well as mortgage-backed security, volatility. Then when it comes to income distribution, you have a dividend from rental income for the equity real estate investment trust. The other one is dividend from interest income for the mortgage real estate investment trust. All right, rental income. While the other one is what dividend is dividend from interest income, dividend from rental income, and dividend from interest income. So the typical example here for the equity real estate investment trust is office, residential, as well as commercial properties. Whereas typical example for the mortgage, REIT here is a mortgage-backed securities, residential, as well as commercial loans. All right. So equity real estate investment trust and mortgage real estate investment trust differ mainly in their investment focus. And of course, we've considered the differences between them. Investment focus, revenue source, income type, income distribution. We can consider all those things. So these are the major difference between real estate investment trust and equity real estate investment trust and mortgage real estate investment trust. All right, and so it is left for you to make your choice depending on your preference. But if I were to make a personal choice, I prefer equity real estate investment trust, because personally I like everything stock. I like everything equity. I don't like interest on debts. That's why I don't really like bonds like the way I prefer stocks. So I would prefer equity real estate investment trust.